Hey, everybody, welcome back to the Loan Officer Playbook, the podcast where we talk about real insights and strategies in loan origination. Today, I am joined with Benji Gecy. Benji has been a top 1% loan officer in the country and in South Carolina for the past 5 years, and I'm super excited to have this conversation today.
Hey,
Welcome,
what's up,
Benji.
Michael? Thanks for having me, man.
Yeah, Benji, this is a conversation that we were gonna have yesterday, but I wasn't in the office and I didn't want to like half-ass this episode. So I'm like, we have to get it in a way where, it's a conducive environment. And we're breaking news here. This is the first time we're recording in our new podcast studio. So you're breaking the podcast
Hey,
studio
the
here.
logo looks great, man. I'm super excited, be on the podcast and excited about the conversation we're getting ready to have. It sounds like you had a busy couple of days over in Dallas, huh?
Oh yeah, yeah. A lot of automation, a lot of things in AI. And a lot of things you're already doing, you're doing even way more, which I think it's a good way to have this conversation right now at this time when, the Dallas conversation is going on. Because I tried your VA chatbot a couple weeks ago, and it had not only access to the guidelines, but live rates. And so we've seen like guidelines chatbots and stuff, but like your thing has live rates and the way it connects with all of your systems. How do you do this?
Well, the VA chatbot has been one of our more popular inventions there. And like you were saying, there's innovation happening all over the place right now. Lots of brokers are coming out with some really cool stuff. The VA chatbot, I mean, we've created a DSCR chatbot, mortgage chatbots, but it seemed like the VA loan was a more complicated one. There was more questions about the VA, but when we mixed in the rates with that, we really started getting a lot of, traction, a lot of, people running through it, and it does email us the conversation and everything. But there's three things that we ask for there, Michael. We try to get the name, the phone number, and email. Sometimes it will give you the rate without putting that in there. But customers, as you know, they want immediate, results in seconds. So going through a chatbot, I ran through yours. You had an awesome chatbot, and I asked it some VA questions. It was right on the money there. But adding the rate structure to it was a big deal for us. We manually put that in there. We train it. We update that every couple of days. It's got all of the disclosures and everything that we need to have there. But a veteran with a 620 score looking to see what his rate is, he can get that immediately on our site there, and they're running through that at all times of the night. So the chatbot, unlike me, they're working 24 hours a day. So it's weird to see that thing triggering at 1 a.m., 2 a.m. Customers are always searching, and they're looking for instant information. So the VA chatbot, we've got that link in the description and everything. I encourage everybody to click on that thing, run through it. It's really awesome. It's really accurate with the guidelines, the VA guidelines and everything. But our rates are really good on that as well. And we've got it priced out really aggressive on there as well. So it goes from 620, 640, 660, 700 and above. And then we've got a special rate for the VA Earl as well.
Yeah. So you have created some of these other chatbots, but the VA just skyrocketed in popularity. What was it about the VA loan in particular that just made it so much more popular than like the DSCR loan?
Yeah, so you can see maybe behind me, we've got, Parris Island flag over there with the golf course. We're located 1 mile from Parris Island Marine Corps Depot. So we've been here 27 years in the same location. A large portion of our business is VA loans. So we've got a lot of veterans in the community. Coastal South Carolina is very popular with other bases, Charleston, Columbia, Savannah, Georgia. Beaufort is a real big Marine Corps depot, and we have an air station here as well. So we have to be experts in the VA market in our location here. And we've done that for the last 20 years or so. But the veterans, as you know, they get a lot of competition from a lot of lenders, a lot of brokers, and they're looking for the best deal. And the veterans are very smart now. They know how to find the best rate. They know how to find the quickest closings. They know how to find the best realtors. And those networks are set up all over the country for mortgage brokers and realtors for the veterans to participate in. So, we drive a lot of traffic to our website, and we want to have those tools available for all customers, especially our veterans, where they can make quick decisions. these guys are getting transferred. They're getting PCS orders all over the world, really. And sometimes they got to make decisions on contracts immediately. They've got to get pre-approved immediately. Sometimes their credit scores aren't always as high as they want it. To give them that information immediately is real valuable for us, and it's real valuable for the veteran. And that's been a really good tool on our website right there. And we've got a nice backdrop with an American flag and everything on it. And we do, as your chatbot does, we tell them right away that, you will have rates, payments, and answers in seconds. And your chatbot did rip off some payments and everything, which is really cool there. But I tried to get it to give me some rates, but it wouldn't do that. And I don't like to do that in the chatbots unless I can manually update it in there, because you don't want AI or any type of automation, trying to read a rate sheet and pricing it out. So, I'll go from the 620 to 640. Obviously, restrictions apply. Rates are subject to change. Those disclosures are on there. But, it does give them a pretty good idea of what the rate looks like at that moment in time with that credit score, which is what we're going to be doing on the Easy Qualifier and the pricing as well.
Yeah. The three most important words in real estate: location, location, location. So you got the location down, you got the real-time data down, and then you have connected those two, but you've also created this kind of like community of following from social media. You're one of the people that you're literally leveraging every single channel, and then you found a way to just loop everything back together to just be directly integrated into your business. Yeah,
exactly. And we've worked really hard the last 3 years. We were talking about that, before the show and everything. We missed it during the pandemic. Our technology wasn't up and running yet, but we've integrated everything together. So when we shoot a YouTube video or a video, a rate report on the local news station or the radio station, we're uploading that to YouTube right away. And then we're sharing that on our Facebook channel, our LinkedIn channels, and we're hitting all of it pretty hard. And we've done that successfully for 2.5, 3 years now. YouTube channel has really grown nicely with just the rate report videos, and social media, we've done real well there. But, with Meta and Facebook, we do get a lot of our leads from that messenger chatbot that works on the website. It works on Facebook, Instagram, and we embed that in a lot of different areas there. Like I said, even a mortgage matchup, that hot link on mortgage matchup, if you go to my profile and you click it, you're going to get in the chatbot. And the one thing that I like about the chatbot is you can customize it with the technology that we have. So you can personalize the brand, and it's not, quite like the VA chatbot. You can see in the VA chatbot, it's just text driven. There's not a lot of areas where you can have promotional pictures and stuff like that. But the one through Meta, we customize it with some cool thumbnails, logos. We really personalize the chatbot. So as they're going through it and they're picking their loan program, their rate, their credit score, stuff like that, they're feeling me, the mortgage expert. Benji, we can put some videos in there for 5 or 10 seconds. That doesn't bog the bot down too much. But we try to go with pictures as much as possible to customize it and let the person know that, we are an expert. We are in the area. This is what we look like. This is what we talk like. And we try to encourage the chatbot and train it to talk and walk like an expert mortgage broker.
Yeah. Benji, I like that you're so successful, but also humble, because you just slid through that you have this YouTube channel where you upload videos. And I just checked, you have more subscribers on your YouTube than the largest mortgage company in the world. You're coming up on 6,000 subscribers on there right now.
Well, the YouTube channel, believe it or not, I think every loan officer should have a YouTube channel. Whether you have 1 video, 2 videos, 3 videos, it can grow pretty quickly, and content's content. And you can use those YouTube videos on your websites. And we do use those videos on our websites a good bit. And what I found out with the consumers, if you have videos, they're more likely to click on the video than read the text. That's just the world we're in with TikTok and everything else. So, I don't know that any video is a bad video, but, the YouTube channel, we do get a good bit of business from YouTube. And that's been a successful campaign for us. It's something we've never done prior to 3 years ago, and it's growing nicely. I mean, I think 6,000 subscribers, I never thought that I would have more than 500. We're at, almost 6,000 now, but I think we can grow that now organically to maybe 10 or 15,000 pretty quickly in the next year. And we've got some ideas on that. But YouTube's been a great partner for us. It's allowed us to do a lot of things on our website with those videos and links and sharing it and advertising it across Google platforms. And we've done that successfully with Facebook as well. So, when you get a YouTube channel and you have all those videos, you can advertise those on Google. And, those are popping up in searches everywhere. And we do a lot of blogging from our website as well, where we embed those videos in there. So we really are using, everything together and integrating it with all of our marketing. And now that the loan volume is really picking up, our calls are really, really increasing across the board here. So I'm looking forward to the fourth quarter here. And, 2026, something we've been planning for about 2 or 3 years here. And we've done well the last couple of years. It's been a slow market across the country. Beaufort, South Carolina and coastal South Carolina is really hot. We're one of the fastest growing areas in the country. And with our military community, we've still done pretty well over the last couple of years. But the phone's really been ringing the last couple of weeks with the recent dip in rates. So the automation's doing great. And I'm looking forward to seeing how it's going to, handle the increase in volume the next couple of months here, Michael.
Yeah. Benji, let's get real into like the tea of it. So you look like a business savvy person. You don't come up as a engineering nerd to me. So how have you been building all of these? What's the playbook? How did you learn to build it? Like, do you have a huge team behind you? How are you building it?
Well, actually, me and a partner of mine, we kind of developed this together. And it took a while to really get it customized. I mean, the technology's out there. You can utilize it. Incorporating it into the mortgage business is the hardest part. So, we took systems and flows that were already out there and we customized them into the mortgage business, into the origination channel, and into the broker channel. So, doing that and starting a conversation on a chatbot, it wasn't hard to do. It's just starting a conversation in the right area, trying to not try to get too much information from the consumer and going to where the consumers are. Most consumers are on Facebook and Instagram. And you believe it or not, most of the older people in our area, the retirees, they're on Facebook. So, my webmaster and the guys kind of helped me develop the technology. He told me not to have that on the website because it does the chatbot opens up in Messenger. But believe it or not, almost everybody has Facebook or Instagram. So if you don't, it's not going to work, but you can still give us a call. But we've never had really any problem of someone not being able to go through the flow because of not having Facebook or Instagram or something like that. So, it could probably be upgraded a little bit to not open up in Messenger, but I like Messenger because you do get the Facebook profile. So as soon as they open up, if they break the funnel, I've got that profile picture there and I can reach out and DM you, whatever, see if we can help you out and just go from there. And that's exactly why I have that on my mortgage matchup profile as well. So if you click on it, you're not able to make it through the funnel for whatever reason, I can reach out to you through Facebook Messenger, DM or whatever. So, but to answer your question, I mean, we've worked hard over the last couple of years. We knew that the industry was changing. We knew that innovation was changing. And as we started playing around with it, we had so much success right away. We said, okay, well, we've got to take this to another level. And the other level was creating customized chatbots with the AI, for example, the VA Chatbot. That's been a really good one to where people can get answers immediately and rates and payments. And, the rate is important, but most of the veterans, they want to know what the payment is. So mixing in the payment and the rate together gives them a pretty good idea. So that was an expansion off of the chatbot. And, the meta chatbot that we do through Facebook and Instagram, we don't have too much artificial intelligence in there. Those are, pre-recorded, rates and statements and everything through the chatbot. We update those, really every other day. So we have the most accurate information on those programs as you're running through it there. But, the videos and the advertisements that we're doing on Facebook and Google, those things are reaching, hundreds of thousands of people. So we do get a lot of hits and a lot of leads off of those chatbots there.
Yeah. And I cannot particularly say one is better than the other because they all work together in a loop. But if you would rank all the different places you've implemented automation, so from the lead capture to doing live rate quotes to doing communicating with referral partners, which you also do, to posting on social media, building that community, and potentially what we're doing too with AI loan processing on the document processing side of things. Which one of those areas do you think is one of the most effective places to implement AI?
Well, I mean, the processing, we haven't started trying to get into anything to help us with the processing yet. So I'm actually really excited to hear about what you guys are doing there. But, the most important part of the business to me, and I think every loan officer, especially new loan officer, should understand this. I've been doing this a long time. The most important part of the business is lead origination, loan origination. You're a loan originator. The most important part is finding the deal. You got to be able to find the deal. Before the technology and innovation really started hitting, it's how many people could you call? How many people could you see? How many business cards could you pass out? That's changing right now. And automation is really allowing you through Google search, YouTube, Facebook to expand all of those contacts with your brand. And I think we do it as well as anyone is we promote our brand. We promote our expertise. We promote our area of South Carolina very well and just being available. And the chatbots do a great job of starting the conversation 24 hours a day. Now, it's not going to close the loan. It's not going to process the loan. Eventually, you do have to call the customer and take that application. But we're about halfway there with the information we have on the chatbot, and we do have that integrated into the loan application and loan operating software. So once we wake up in the morning, there are a few leads in there. It's probably pretty much 50% of the application is taken there, which is nice.
Yeah. And it's like, as long as you keep bringing on new business, you can have the manpower to handle that new business. So this is what I tell most people when, they're trying to implement some sort of like lead processing stuff. But I'm like, you're not getting any leads. You cannot process that.
That's got to be number one. You got to be able to get the leads right away. So, Michael, you can't process the loan. You can't underwrite the loan. And you sure you can't close the loan if you don't have a loan. So you got to find the loan first. And that's something that we spend a lot of time and a lot of effort of trying to find that consumer. Now, the next things we'll be going to probably will be a problem, hopefully, is the processing of all the loans that we have. So we're able to manage that right now, but I'm sure we're going to need some help if things really pick up the way that we think is going to happen here in the next couple months.
Yeah. Speaking of, things picking up, we're expecting a large refi boom, coming up. I really think rates are going to go down. I am very bullish that rates are going to go down next year, looking at the political climate and all of it. But as rates continue to come down, do you think the differentiator would be AI, or will the differentiator be people who already own the loans?
Well, I think if you're not involved in some type of artificial intelligence, innovation, technology, automation right now, you're really far behind. And you've got to find some partners out there to help you with that. What sparked me was I was in the first UWM Success Track class back in January 2020. One of your employees, Jessica, was the teacher in there. And, she started going over some things with my business and my brand that was very alarming to me. And, the business shut down right after that. So I had a lot of time to think about what I was going to do. But I really, after 20 years of doing things a certain way, I was not a technology guy. I did not have the greatest website. And I did all of that within the last 5 years to get to where I am now. I was never a top 1% broker. I was a successful broker. But for the last 5 years, since that Success Track day, I've been the top 1% of mortgage brokers in the country with really only a couple of loan officers. I can tell you that the technology, the automation has played a major part of that. So, you have to get up to speed. If you want to grow your business, you got to have some type of automation. You do have to offer great service and great customer service, and you do have to have good rates. But two things we did, we implemented automation and we came down on our compensation from 2.75. Matt Ishbia pulled me aside in one of those first meetings, asked me what my comp plan was. I told him 2.75. I'll never change it. And he said, you needed to lower that. Well, as soon as I lowered it, I started really winning deals and started closing a lot of deals. So for those of you out there who don't change your 2.75, I encourage you as a broker, bring it down a little bit, be more competitive. You'll see a lot of results if you do that as well.
How long did it take to get from, starting the new business to being in the top 1%?
Well, it's hard to say because, as we opened back up, the phone was just ringing off the hook with the rates. And we're in a very popular area of coastal South Carolina. So we have waves and waves and waves of people, literally in 1 month, they bought everything on the MLS. That's how crazy it was. There wasn't a house pretty much listed on the MLS in 30 days when they came in. So there was a big flood of that. And you can imagine the increase in property values raced up rapidly. But, it's probably been a solid couple of years to really get it the way that I want it. And it's still not perfect. It's not a perfect platform. It does work really well for us. There's still a lot of other tools that we could integrate, but I'm a one-person show. I've got one other guy helping me. That's it. There's no other team. So you still have to close loans. You still got to be a father, a husband, a manager, a broker. I like to play golf. So doing all of that has been difficult. Luckily, the mortgage conditions have been a little slow. We've still been busy, but we knew that we would get to a point of the cycle where it would pick up again. It always happens. I've seen about 6 of them over the last 25 years. And so we were really kind of gearing up towards the next refinance boom, whether that would happen in 2025. I was hoping that it would happen in 2024. 2025 looks like it's going to be tail end. I'm like you. I think 2026 is going to be a very solid year for rates. I'm thinking rates are going to get into the mid to upper 4s. And if that happens, trillions, trillions, and trillions of dollars are going to be refinanced, and then even more people are going to be able to buy. And I have thousands of people waiting right now to buy because of the rates. We're at the highest real estate prices in history, and we're at 30-year highs on mortgage rates. So it's very difficult to buy right now, especially in our area where we don't have a lot of industry. And there's thousands of people just in my market waiting to buy. So as these rates come down, you're going to see the purchase market really pick up as well.
Yeah. I'm curious, Benji, which loan program you think it's going to benefit the most from rates going down?
It's hard to say in our area here. The DSCR programs are definitely going to pick up. As the rates come down, the investors are going to hit the markets really hard. So I think investor loans, DSCR loans, those are going to really get more popular because the properties will cash flow more. In the areas we're in, we're a very popular destination for vacation. So we see a lot of investor type loans. The DSCR is really getting a lot of traction around here. Bank statements only, the self-employed people. I think all of the programs are going to pick up, especially as the rates go down. It creates a lot of opportunity. That's going to stimulate the economy with the lower rates and housing markets. Again, as the rates come down, you're going to see property values go back up. So if you can buy, now is the time to buy. Don't wait for the rates to go down. And you should be telling your consumers that if you can buy right now, buy right now. The rate's 7% and rates go down to 5.5 or 6. Well, you just got your $400,000 house for $325. So don't wait for the rates to come down because the house will go from $400,000 to $450,000. And that's a fact. That is going to happen if these rates go down. So I'm encouraging people through my channels, radio, Facebook, some of the limited TV spots that we do with interviews, buy right now. And that is a question that everybody asks me as a mortgage expert in my market. Should you wait or should you buy? If you can afford to buy, whether you're an investor, full documentation, conventional VA, you buy right now. Definitely. Market's cooler. Prices are down. Sellers are willing to work with you a little bit right now. And, we try to sell as many 2-1 buy downs as we can. That is a great program to have right now. And we do a lot of 2-1 buy downs with our realtors and our buyers in this market.
It's never like a seller's market or a buyer's market. It just depends on the perspective from which you look at it. It's a $2.4 trillion a year industry. If someone's selling, obviously someone's buying. So
it's definitely cooled down. There's no question about it. We've got properties on the market in our area here that would stay on the market 1 or 2 days. They've been on there 45, 60 days and the prices are coming down. That's why I'm saying, with the forecast of rates, everyone thinking that rates are going down, now's a great opportunity to buy. You got to take advantage of it. And, as a mortgage expert in our area, I tell the consumers this every day: get out there and try to find the home, because it's not going to be the same conditions in 4, 5, 6 months down the road.
Yeah. Benji, I want to talk a little bit more about your personal brand. So you work with another partner, and you've been able to build this personal brand, and then now you're getting more business, and you want to scale up your personal brand. But you want to have a social life. I mean, you like going golfing. You don't want to be recording YouTube videos 24 hours a day unless you do. But I'm guessing not. Like, how do you scale up your personal brand and that personal touch with these borrowers as automation comes into play?
Well, I think that's important for us as a small shop, as a boutique shop, only a couple of employees. My success of what I've created, we're trying to bring in new loan officers and encourage them to promote their brand underneath Beaufort Lending. So, if they grow, we grow. And it's the same formula of what UWM does for brokers across the country. So, they don't have to do things the way that I do it, shoot videos and, do interviews and stuff like that. But you do have to promote your brand. You have to do that through social media outlets. You have to let people know that you're in the business. Whether it's just posting, shooting a quick video or whatever, but you've got to be out there and you got to be available. So we're going to help our new employees, really get geared up with promoting their own brand, not my brand, not the company's brand, but their individual mortgage brokers. So, we've done real well over 25 years with my brand, and then the last 5 years really gearing up with the Benji Gecy brand, the broker. But we're trying to get them to find their little spots in the market of what they're successful at. But you do have to customize it. You do have to promote your brand. That's one of the things that I've learned back in 2020 at that success track. I had to take a look back at 20 years of business. What is my brand? What is my company? And when I looked at it, there was really nothing. There was no digital presence. It was weak. We still did great. Don't get me wrong. We were a highly successful mortgage broker, but I knew I needed to take that to a different level with my digital footprint. The minute I did that, we got instant results. And I'll never go back from here. I'll always have a great digital footprint. If you pull me up online, we got videos, we got posts everywhere. And I think we do it probably better than anyone in the country. I mean, I don't want to brag, but it's we've worked really hard to get where we are right now, and we're just trying to get other people in our organization to do the same thing because it's been working pretty good.
Yeah, and this is a luxury that is more pronounced in the broker side, because in the retail side, the company is the brand.
Exactly.
The loan officer is not always the brand. It's like people know the name of the company, but then if you're a retail loan officer trying to go on the broker channel, now you have to build your own book of business. I mean, I've heard retail loan officers tell me that, hey, they're trying to go to the broker channel, but then they have to build their database from scratch. But would you? I mean, I don't want to stir the pot here because I know you're you're an independent broker guy. Who do you think is more positioned to be on top in the new market? Is it the retail side? Is this the broker side?
The retail side. I mean, as long as they continue to not offer the best deal for the consumer, their market is going to shrink. Brokers are gaining a lot of steam. I mean, I've been a mortgage broker 27 years. So I was in the business back when we dominated 75% of the market. The mortgage broker channel is growing. Loan officers that are working for retail lenders, they're making the move to the broker side of things. So I can see, little spots here and there of that number increasing every other month. I think with the move going lower, you're going to see even more retail loan officers jumping over to the broker channel. But I think you'll see in a couple of years, you may see a double-digit move in the mortgage broker market. I mean, there are a lot of people. There's a lot of popularity. We do need rates to come down a little bit. Like I said before, we're at almost a 30-year high for interest rates. A lot of areas across the country are not as busy as coastal South Carolina. So there's not a lot of business out there. But as that business picks up in all those softer markets, you're going to see a lot more loan officers getting into the business. And I think within 2 years, you'll see another 10 to 15% grow in the broker channel right now, I think.
Benji, what drives you though? You seem like a very motivational person. You seem very self-driven. What drives you?
Well, I mean, I like to chase. I mean, I like to win deals. So, every day I try to win every deal, whether it's $75,000 deal trying to make it work or, $800,000 deal over in Hilton Head at the, by the beach there. I like to help families. I didn't grow up owning a lot of homes as a family, so I like to put families in homes. I get great satisfaction out of that, and I love to help consumers. We just, probably the greatest loan this year, just saved this retiree $1,900 a month. It was make or break for he and his family. He could not sleep at night. I don't even know how this guy was living. We're closing him today, actually. It's closing at 3 o'clock, saving $1,900 a month. I told him on the phone yesterday, it's by far the best loan of the year. So, you take that, someone who's stressed out every night, they can't sleep, he's retired, he's on a fixed income, you're able to save him $2,000 a month. That's life altering. So, very, very happy to do transactions like that. And that's a refinance. So the purchases are even more satisfying, putting people into their first homes, helping them, fulfill their dreams of home ownership when another bank could not get their deal done. We do that every day at Beaufort Lending. We get people walking in every day, coming through the chatbots. They got turned down with another lender, another bank where their ratios could not go high enough. Maybe our experience was able to redesign it and make it work. But, having lenders like UWM, we do a lot of business with Orion as well. Those are really good partners that help us with their underwriting teams, be a little more flexible, underwrite to the guidelines and maybe do a little more manual underwriting outside of the automated underwriting system. So, that's what drives me is just, winning the deal and getting these deals closed.
And helping people. I love it. I love it, Benji. How can our audience reach out to you?
We're all over the place. Check out Beaufort Mortgage, Beaufort.mortgage. You can go to Beaufort Lending on YouTube. Go to Facebook. Check out one of our pages there. We've got Beaufort Mortgage on Facebook, Beaufort Lending. I encourage you to check out those chat bots. Mortgage Matchup. Go to Mortgage Matchup. Look up Benji Gecy, Gecy. Click on that hot link there. Run through that chat bot right there. I'm really proud of that chat bot. That thing is really awesome. It works easy and it gives you rates on all the programs pretty quickly. Even DSCR, Michael, you can get a pretty good DSCR quote there. But VA, we get a lot of veterans running through that. We do get a lot of conventional stuff. The only thing I haven't been able to master in there is like a VA construction loan scenario there. So if you're trying to go through construction, you may not get the best rate or the most accurate rate on the construction, but we're still working on that one.
I know you'll figure it out soon. Guys, I cannot stress this enough. I was super impressed when I used that chatbot and the way it was connected with the entirety of his systems. I'm going to put the link in the show notes, so definitely check it out. This has been a very, very insightful episode, and honestly, just proved that you don't have to have a huge team to implement AI and automation. You don't have to work for the largest lenders. You just have to have some sort of self-motivation and drive, as you've proven.
Michael, you got to be motivated. I'm 51 years old. I did this 5 years ago. It can happen pretty quickly, but you got to have a lot of desire. You got to be motivated and you got to be willing to change. All right. The industry is changing. I saw it. I had a big light go off with me up there at UWM, and those guys helped spark the fire that I have right now. But you got to do it. The market's going to change even more with all of the innovation. It's happening so fast. So the things I'm doing right now, and a year from now, there's going to be something else that's even better. So you got to stay on top of it and find things that work good for your, systems, your markets. And, I didn't try to be someone that I wasn't. All I did was I found some innovation and automation and I just customized it. And that worked out pretty good for me. So we're still trying to make it a little better. But, that self-promotion has worked out pretty good for us there. And we're looking forward to the next year with these lower rates and everything. But listen, if anybody has any questions, needs any help, if they have any questions of how it's operating, just reach out to me. You can give me a buzz, email me. I'm all over the place on our websites and Facebook. So I'll get right back to you, I promise.
Right on, Benji. Thanks for coming on.
Michael, thanks a million, man. Great show.
Awesome. This has been another episode of the Loan Officer Playbook. I'll see you in the next one.